Hello, I'm Sarah Batul and welcome to the forefront of global headlines. New research warns that global warming and heat waves will drive up food prices and inflation worldwide. Scientists and the European Central Bank predict a 1.49 to 1.79 percentage point increase in food costs annually by 2035 due to rising temperatures. Extreme weather events including heat waves, droughts, and floods are becoming more frequent, impacting farming and food production. The impact will hit developing nations hardest, with Africa and South America expected to suffer the most. Even regions already experiencing high temperatures will face higher prices, highlighting the urgent need for climate action to mitigate these economic consequences. Pakistan's economic landscape witnessed diverse developments this week. The stock market maintained a bullish trend amid the State Bank of Pakistan's decision to maintain the policy rate at 22% and the achievement of a staff-level agreement and the IMF. However, concerns lingered regarding stringent conditions for accessing the last tranche of the standby arrangement. The government reshuffled the cabinet committees, assigning the chairmanship of the Economic Coordination Committee to Finance Minister Mohammad Aurangzeb, signaling a strategic shift in economic decision-making. Meanwhile, the crackdown on the jewellery sector to curb speculation and smuggling led to advancements in daily bullion trade announcements, albeit promises to enhance sector transparency remain unfulfilled. Short-term inflation decelerated to 29.06%, offering slight relief after 18 weeks above 30%. Despite Pakistan's GSP Plus status, exports to European countries declined by 6.89%, with decreased demand in key regions. While Eastern Europe saw a slight uptick, exports to Western Europe, notably Germany and the Netherlands, registered significant declines. Chinese Commerce Minister Wang Wentao met with top executives of global companies including Apple Inc. and SK Hynix Inc. ahead of a major business conference aiming to attract foreign investors amid trade tensions. In meetings with Apple CEO Tim Cook, Hynix CEO Kwak No-jung, and others, Wang reiterated China's commitment to opening up its economy and providing growth opportunities for multinationals. These discussions occurred before the China Development Forum, where foreign business leaders engaged with Chinese officials. With foreign investments in China declining by nearly 20% in January to February, Beijing is intensifying efforts to allure foreign companies amidst geopolitical challenges and supply chain diversification. India extended its ban on onion exports indefinitely, surprising traders and exacerbating high prices in overseas markets. The ban, initially imposed in December, was expected to lift as local prices halved and fresh supplies emerged. However, the government announced the extension late Friday, citing no specific timeline for lifting. Prices in Maharashtra, a major onion-producing state, dropped from $45 to $14 per 100 kg. Prime Minister Narendra Modi's decision coincided with upcoming general elections. Import-dependent countries like Bangladesh and Malaysia were affected, facing high prices and limited options. Rival exporters capitalized on India's absence, quoting higher prices due to reduced competition. That concludes our weekly roundup of economic news. Until next week, stay informed and stay connected by subscribing to DawnNews English.